hello and welcome. It looks like we are live, and it also looks like sound is coming through, unlike yesterday, which there was no sound, um, which is good. So welcome everyone. Today is what day is it? Today's Tuesday, I believe. Is it? Oh my goodness, I need to check just to make sure. Yes, today is Tuesday. Hope you're having a wonderful day, and this is, of course, the Let's Build $1 Million Business Together live stream. And what we do here, or what I'm doing here, is basically I'm just live streaming the process that I'm using in order to try to build my company into something that can generate $1 million of revenue every single year. That's kind of the criteria. And not quite there yet. Still have a little bit of ways to go, but we're plugging away every single day. And I'm hoping that I could learn a lot from a lot of people out there that have basically gone through this process and have made their own $1 million companies and what have you, because I've never done this before. So I'm absolutely not here to teach anybody how to do anything, but here just to, put my experiences out there to the world, and hopefully maybe in the future, somebody can learn from them. And of course, for myself to learn from them as well too. One thing I've noticed too is that I've probably said this before, but when you explain things and you try to verbalize things that are in your head to see if what your understanding or comprehension is of a specific topic, when you speak about it and you could articulate yourself clearly and in a manner that other people can understand, then I think you have a good grasp of the concept or whatever it is that you're speaking of. So doing this, it actually kind of really helps me. It helps me gather my thoughts, and if I can't really verbalize what I'm thinking to you guys, then it kind of tells me that I have a lot more to learn in that specific field. So, and a good example of that today would be talking about QuickBooks and talking about how I manage the day-to-day tracking of every single penny that goes in and out of Pixel. And I could say that I am super, I don't know, maybe like really anal, I guess really would be the way. Like I need to know that everything is tracked perfectly, and I need to make sure that everything is right. And it's very difficult for someone like me who is very attentive to detail and wants to make sure everything's right when I don't even really know how to do things, because I've never done this before. I never used any kind of software in order to really track my expenses and all my business activities. So there's a lot of learning that I'm trying to do in the process, and I've already taken one QuickBooks course. It was a 10-week course, which was 40 hours a week, which is really fantastic in laying down kind of the fundamentals. So I think I have at least a decent understanding of the fundamentals of accounting. By no means am I an accountant, or do I even want to be an accountant. But I do want to make sure that everything is set up on the ground level to make sure that moving forward, I'm building things on a very sound foundation, right? And it's been a little bit of a challenge for me because, again, I don't know accounting, and I know it's very complicated. And I know two things. Number one, I want to make sure that I do it right, because as I was talking about yesterday, if I have to pay taxes, I don't mind paying taxes. I'll pay what I need to pay and make sure I do everything, legally and everything on the up and up. But at the same time, I also want to make sure that things are set up in a way so that I can minimize how much tax I want to pay, because I would rather keep that money into the business than pay the government so that they can just waste that money away, right? So that's my kind of frame of thought about this whole kind of accounting thing. And so I figured we could take a look at my accounting and how I have things set up right now. And again, this is not me teaching you how to set up your QuickBooks or anything like that, but this is just my understanding of what I know about accounting so far and how I decided to set up my QuickBooks in order to get started on making sure that I'm tracking all my expenses and all my income and everything in one place, so that I make sure I have an accurate representation of how my business is doing. And one thing too that I really want to learn is how to really use the reports that are generated within QuickBooks, or just any report that a company generates, to be able to understand if a business is actually doing well or not. This is something that Warren Buffett talks a lot about, and that's basically his bread and butter. Is he looks at the reports from companies and decides whether that company is doing good, doing bad, and he looks at the market and all that kind of stuff, and he decides whether he wants to invest in a company or not. Now, is he right every single time? I don't think so, but being one of the richest persons in the world, just by picking stocks and companies and what have you. He knows what the hell he's doing, right? And he has a knack for that. And most people don't have a knack for that, which is why, he recommends, just for the standard person, just do index fund investing and you'll be fine. But that being said, I do want to learn the basics of how to read the different reports that a business generates, specifically my business, and to be able to understand if my business is doing really well or not. Because you need to know that in order to, not run out of money or not be able to pay employees if you have employees, all that kind of stuff, right? That's really, really important to make sure that's all figured out, right? So what I know is that I think you need to have, or I think what is really important to understand are 3 different reports that a company that are I guess that form the framework of understanding whether a company is doing really well or not. And that's a profit and loss report. And I think that's the same thing as like an income statement, I think. But a profit loss report, and then also a cash flow statement to understand how much cash a company actually has. And then the last one I think is called, what is it? It's something to do with like your assets. What is it? Now I have to take a quick look. Oh my goodness. A balance sheet. That's it. So a balance sheet, I think, gives you the reports of your, like your assets and your liabilities, I think. And then it puts it up, what your balance is on what you owe versus what you have. Right. Okay. So understanding the balance sheet, understanding which is your income, which is your assets and liabilities, and then your income statement or your profit and loss, which is your expenses versus, that would be, expenses versus your income. And then I guess your cash flow, which is, I guess, just the flow of how much cash is going in and out of your company. Like I said, I don't know the ins and outs of these 3 different reports, and I don't know how to put them together to piece together whether a company is going good or not. But anyways, we'll take a quick look at what's going on with Pixel right now. And if there's anybody watching, you can have a look at these reports and you could tell me what you think about it and how well I'm going. Like, I think I'm doing pretty well because I know I have cash available and I'm able to pay myself what I need to pay myself in order to put food on the table and have some left over in order to pay for all my expenses and all that. So I think the business is doing really well. Is it like this $1 million business? Like, of course not. But one of the questions are, can it become that? Am I on the right track in order to generate enough revenue that I'll be able to, hire some more people, get some more work, et cetera, et cetera. I think those are other questions too, or answers to those questions are going to be more than just looking at the profit and loss statement. It's going to be looking at the whole marketing and how I'm going about getting clients and what am I doing in terms of getting a sales funnel set up and all that kind of stuff, which is something that we're going to be looking into probably around next week once the website is done and out and live or what have you, so I can actually start doing some marketing and we can see how that's going to be going. I think that's where this is going to start really getting very interesting and figuring out how we can generate more revenue. So anyways, but let's not get too ahead of ourselves. And the first thing that I think we will be good to talk about is to talk about, let me zoom this in, is to talk about the chart of accounts. Now, I don't have a definition for what a chart of accounts is, but maybe I should have one. So let me see if I can share this sheet here. And I also want to know, can I get a new window here? Let's just see. Chart of accounts definition. All right. Let's see. Chart of accounts. What is a chart of accounts? Zoom in here. A chart of accounts is an index of all the financial accounts in the general ledger of a company. Okay. In short, it is an organizational tool that provides a digestible breakdown of all the financial transactions that a company conducts during a specific accounting period broken down into subcategories. Okay. So actually, I kind of like that. It makes sense to me. It's an organizational tool that shows you how you're spending and tracks every single transaction that your company has. So that makes sense. So every chart of accounts is completely different depending on the company, because every company has completely different, items that they spend on, different sources of income or what have you. But from my class, from what I remember, is there are kind of 5 primary types of accounts in your chart of accounts. The first one is an expenses, which are, accounts where you have different expenses, things that you're actually purchasing on a daily basis or whatever your company spends money on to buy. Those are expenses. Not all of them, but anyways. So you see what I mean in a second. So income are accounts that bring money into. Equity this is where I have a hard time with equity, because whenever I think of equity, it's like, oh, what percentage of a company do you own? But equity, I guess, what could it be defined as? I don't know. So I don't want to say anything that I don't know. I wonder if they could say it here. Examples of a chart of accounts. My goodness. Assets, liabilities, shareholders' equity. That's different. Types of accounts in chart of accounts, if that makes sense. Let's see what we can find out here. I want to get like an overview for what equity. Oh, what the heck? No, thank you. Yeah, I think what would be safe to say, and please do correct me if I'm wrong, I think it'll be safe to say that equity is the amount that someone who owns the company or part owner or whatever they contribute or whatever is owed to them as part of them having ownership of the company. So I think an equity could be like when you pay out dividends. I think that would be like going to an owner's equity account, right? So it's what the owner has in ownership within the company. So I'll talk a little bit more about that in the equity accounts that I have set up, which might make a little bit more sense. And then there's assets. So those are physical things that the company owns, like it could be property or it could be, vehicles, things like that. And then there's liabilities, things that the company owes. I think assets too could be something like accounts receivable might be like an asset. So those are the 5 main types of accounts that I know of and that I use for the most part on a day-to-day basis. And so let's break this down a little bit here. So this is a sample. I mean, there's lots of different ways you can write chart of accounts. And I guess what I'll say is when I was setting this up, I went back and forth a lot setting this up, and I'm still tweaking this right now to make sense for me. But I'm a very, very big proponent of simplifying things. I don't want to have like receipts or things that come in as expenses and having to like subdivide them into so many different categories, or really trying to categorize things so in such detail that it doesn't matter. Because I think when you're doing your taxes, I think there's only a specific amount of categories in the tax that you put into, and you don't have to break it down simply. Like as an example, so like here I have an office and studio account set up. So you could break this down into something ridiculous. Well, maybe it might not be ridiculous to you, but depending on your situation. But you could have something like, you can have a category for pencils, a category for pens, one for like staplers, one for Kleenex, one for erasers, like all kinds of different. You can have different categories for every different type of, or different account for every different type of office supply that you want to purchase. Or you can just have one account that's just office supplies, right? So it's that kind of frame of mind where I'm trying to think of how can I get how can I set up my accounts so that it could be generic enough so that I don't have to spend so much time categorizing every single thing and figuring out where it goes, but yet detailed enough so that when I'm looking at my reports, that I can understand where my money is flowing. Do you know what I mean? So, and what I've utilized as well too is having subcategories. So for example, here in my expense, I have software subscriptions. Now I don't know how many it is. We'll take a look, but I think it's at least 15 different software subscriptions that I have. And that's a lot. Like I don't want to, when I'm looking at the profit and loss statement, I don't want to see every single one of those. I want to just see like how I'm like, what am I spending on all software subscriptions, right? Oh, it's $5,000 a year and that's all on software subscription. That's great. But then when I click on that, I could then go into detail to see which ones I'm spending the most money on. So then I still have the flexibility of going in to more detail as to how I'm spending my money. So that's software subscription. So that's like a main account. And then what you can have in QuickBooks, you can have sub accounts of different accounts as well too, which is really nice. And that's kind of how I've separated my chart of accounts, is where I'll have a main account and then I'll have sub accounts if it makes sense for that specific category. So utilities, so those are things that I do have sub accounts here. So I have internet services, and then I think I have like phone bills. So those are the only utilities that I pay. So vehicles, so I have here, I don't actually, like the company doesn't own any vehicles, but I do put in things like parking tickets. And what else do I put in for vehicles? I can't remember. There might be something else as well. Not parking tickets, but like if I have to pay for parking. So office and studio. So I think I have this set up in a few different categories, where if it's office supplies, I'll put that as office supplies. And then I have something for like office decor. So if you look behind me, there's like the fake plant and there's like the bookshelf with some stuff on it. To just give a nice ambiance to my office here and for my set. So I have that as well as kind of an account. So anything I purchase as part of like my set or my studio here, I put that in there. So brand and marketing. I think there's, again, a couple different categories under there. We'll go into this into a little bit more detail, I guess, once we look into QuickBooks. So insurance, fees, employee meals and entertainment, employee health and fitness, dining and entertaining clients, computers and laptops, computer hardware and accessories. So I separate these out too because I do lots of stuff with computers. I buy a lot of different little pieces of hardware for computers, and I want to separate that from an actual physical laptop or computer that I've purchased. AV gear and accessories, which is audiovisual gear and accessories. So things for my camera or things for my microphone or what have you, that kind of goes there. Equipment rental, if I ever need to rent anything for work that I'm doing on location, that goes there. And then accounting services. And this could also, I could probably break this down. Or in the future, I could have something like professional services and then break that down and having accounting and, like lawyer fees, legal fees, because I'm probably going to have that as well too at some point. Or maybe they could just be separate as well too. Like, I think that's just, when it gets to things like that, I think that just depends on how it makes sense for you and how you want to look at, how your expenses are flowing, through your company. And then I have a few income accounts. So basically, as we've gone on for when I've been doing like my web design stuff, you've seen like the different categories that people can pick in terms of the services that we offer. And then I just kind of mirrored that in my chart of accounts. So if somebody wants a website or they want an application, that's under here in web design and development. And if they just want hosting services, because that has a cost associated with it as well, that goes here. Creative consulting, if there's any work that I'm doing, whether it's creating content or working with clients that I already have, just helping them out with their branding and all that kind of stuff. That's just kind of a consulting bucket that I put everything in. AV production, so if you want to do a podcast or want to do a little video or a film, whatever it is, that goes there. AV event management, so say you're having a conference and you want me to go in and run all the cameras or do a live stream or whatever the case may be, anything that has to do with AV management, that goes here. And then affiliate marketing, I have this now set up I'm not using it just quite yet, but I do have some affiliates set up for things that are going to make sense for the company moving forward. Whether I recommend products that I already use, things like Webflow. I love Webflow and I use it, and there's affiliate marketing as well there too. So people that click on it, if I run tutorials or I do courses on that, and if people buy it, there'll be some income that's generated for the company, and then that'll go in here. So equity, as I was saying before, so I have, I think 3 different accounts. I might have more. I'm not sure, but probably not, because I don't really understand if I have it set up quite correctly. But so I have owner purchasing. So when I set up my corporation, I set it up in September. And before I was able to get a company credit card, because there was no company in existence, I used my own personal credit card to buy stuff for the business. So what happened there was a whole bunch of stuff that I did purchase. I put that in an owner purchasing account. So that way I knew how much I could repay myself, or the business could repay myself, in order to balance out, the initial money that my personal self contributed to the company. So it was under an owner purchasing account, wasn't just an expense, right? And then I have owner contribution as well too. So when the company first got incorporated, I just gave or had the company purchase. I'm not sure exactly how it's come, but I put into the company some hardware that I have owned. So some cameras, lighting equipment, like my desk, all kinds of different things that I use on a day-to-day basis for the business. Those are now assets of the business. So the business owns them. I don't own them anymore. And so that's a contribution that I made to the business. And then that's a contribution that the business owes me in terms of the dollar value of what that contribution was. So that's a way to track that in an equity account. And then I have another one of repayment of owner purchasing and contribution. So anytime even in the future, or not in the past, but anytime in the future, if I have any more purchasing or I do contributions, like if I purchase something with my personal credit card and I was like, oh, actually that was a business expense, whatever, it goes into that account. And whenever the company repays me, that's through a repayment that goes into this account. And then we have assets. So I have computers and laptops for assets and AV equipment. And assets are a little bit different than expenses, because I think assets are things that you can't generally expense because it's too much. Because when you expense something, there's a limit to how much you can expense, because when you expense something, you just basically write it off at 100%, right? But if you buy, like a car, you can't just expense the whole car and then you don't have to, pay any taxes on it, or whatever it is. You don't lower your income by that much. It's basically like a capital. I think you have to do like a capital. What is it called? Like when things depreciate, there's depreciation every year of your capital or that you own, right? So what is that called? I think it's like a depreciable asset. So I don't know what it is for card, but anyways, if I bought like a $5,000 computer, I can't write that off as an expense from the CRA. They're going to come back and say, no, that's not an expense. That's actually an asset or a capital. I don't know what is this, capital goods. I'm not sure what the exact term is. This is why, counting it gets me. But it's like some kind of asset that has to have capital depreciation or depreciation every year. So you can claim like 30% of it every year until 5 years until it's depreciated. Then it's, I don't know, not that it's not worth anything, but then it's just, I don't know. It just depreciates until it gets to the value of zero, right? Especially with computers over time, after 5 years, that computer is pretty much worthless because no one's going to buy a 5-year-old computer, for the most part, right? So anyways, those are assets. So again, if I had property or like a warehouse or something like that, or if I bought a location where my company is going to be run out, is based out of, those would be assets that the company has, and that would be on their sheets. And then liabilities are things that the company owes, right? So liability in this case, I know I have a GST, HST payable account, and there could be other things too here. I don't have them, but if I had a loan or a mortgage, I think those would go here under liabilities. That's my thought on that. So that's how I set up everything, and I've been going back and forth on this over the past, since I started my company, which was September. I think I maybe started QuickBooks in October. It was pretty close after anyways, as soon as I kind of started making some money, because you had to kind of organize these things. So, so that's my chart of accounts. So I think what we'll go now is we'll kind of see how this is set up in QuickBooks and kind of how, I guess, my day-to-day runs inside of QuickBooks, or when I use QuickBooks. So let's bring this up here. All right, so I got to be careful not to try to flash any sensitive information, but I don't really care about showing the money, at least right now. I mean, that's the whole point. You know, I don't know. I guess that's just me. Maybe my accountant will come and say, like, don't show sensitive information or whatever in terms of, you know, how much money or whatever. But I don't know. It doesn't really bother me. To be honest, I like to be, I guess, transparent about what I do. Yeah. So anyways, so here's QuickBooks. So when you log into Facebook, this is Facebook. QuickBooks. I don't even have Facebook. I don't know why I'm saying that. Let me see if I can zoom in here. Okay. That's a good zoom, I think. Okay. So when you log into QuickBooks, you're kind of greeted with this dashboard, and it's kind of cool because it shows you your profit and loss, and you can kind of update like the time. Shows your expenses, shows your invoices if you're using QuickBooks to generate invoices, which I do for some of it. Some stuff I generate invoices and people pay directly through QuickBooks. But more often than not, I'm generating an invoice outside of QuickBooks for a couple reasons. Number one, because they don't pay through credit card. It's paid through like purchase orders, and the money gets directly deposited into my bank account, or it's like an email transfer or what have you. And secondly, because their invoices are just hideous looking. And me being a creative design, you know, agency or what have you, I like my things to look really nice and had to everything to be branded really cohesively, which is why I'm looking at building an invoicing company or software where I could just simply send out my own invoices, and maybe it connects here through QuickBooks or not or whatever. I'm not sure exactly how that's going to work, but I want to be able to send my invoices and collect my money through a different portal than here, and then just link it in later on once I get the once the information hits my bank. And speaking of that, so this is an overview here. Yeah, is there anything else that I need to say about this? I mean, you could change this thing. You could change between, just keep things this fiscal year. Yeah, no, it's pretty nice. Again, you can get a good overview as to where you are. And again, like I feel like for myself that the business is going pretty well. Because you look at sales here, I could see that every month I'm bringing in, you know, upwards of, well, $5,000 was 55 was the least amount since November of 2022. And now it's just about when I started. That's another thing too, in terms of fiscal year. I don't know what to set my fiscal year as. And that's something that I'm going to talk to my accountant tomorrow and try to understand. Because right now I have it synced to when I owe GST. And I incorporated in September, and I had to pay GST at the end of October. So there was September to like the end of October. So I just set my fiscal year from like November 1 to October 31st, which is kind of nice. It's Halloween, like that's my fiscal year. So that means I've already had one fiscal year, which was only like a month and a half of actual work. And then this fiscal year starts, you know, on November 1st. So that's what it's set. Does that make sense or not? I literally have no idea. I have no idea. And I think depending on what kind of company you have, you might have different thoughts as to when would be nice to have a fiscal year. So if you do all of your business, like say at Christmas time, like that's like 80% of your sales is Christmas because you run, I don't know, a Christmas shop, then I think it would make sense to have your fiscal year end maybe like in January, I guess, like after all the Christmas rush or whatever. So you have time to go over all your expenses or whatever and input. So having a fiscal year end January, February, I think that's when that would make sense. But for me, I don't really have any, like, I don't know what would be a busy season or whatever. I think it's just like people might need websites at all kinds of time. I'm hoping, right? So I'm hoping there'll be a steady flow of business. So I just put the fiscal year as matching what my GST payment is, which is at the October 31st. So just to keep things kind of consistent, I guess, or same. So I know when GST is due, that's when my fiscal year is due as well too. And then I'll have to prepare, you know, my taxes or what have you. So anyways, so I don't know where I got to that. Yeah, fiscal year. So anyways, so like, I mean, I look at my sales. So, I mean, that's pretty good. And then I look at my expenses. Okay, 26K in income, just under 10 of expenses, so a profit of 17,000. That's pretty good over this fiscal year. And again, that's only been November, December, January, and maybe almost February. So 4 months. That's not too bad to have a profit of 18K. So, I'll take it. But again, I think you need to understand cash flow. You need to understand the assets. You need to understand the liabilities to understand if this is actually a good trajectory of where the company is going. And I don't really know right now. So I have to figure out how to get a good sense of all that. So what do I do on a day-to-day basis in QuickBooks? So I guess what we can do, let's take a look at our chart of accounts. If we go over there to accounting, we have a listing of our chart of accounts, and everything that I mentioned here is pretty much in here. So I think these are filtered by expenses now. Let me, can we see settings? Let's show like 150. I don't know how many I have. I think it's about 100 or so. There's one thing that really bugs me about QuickBooks is they have a bunch of default accounts that you can't get rid of. And it's very, very annoying to me because I like to be like, if I want to set up my chart of accounts, I want to set up only the things that I use, and I don't like to have things that are empty. So there's things in here that I don't even really know what they are and what they do, but they're here and I can't get rid of them. So probably has something to do with the back end with how QuickBooks calculates reports or something like that. So I don't know. They're just there. But anyways, so let's just go through them here. So I have a vehicle expense account, and you can see this little indentation here from vehicles. Can you see that? Yeah, I think you see that. From vehicles and parking and tolls and fuel. So these are all the different, these are the expenses, it's like a sub account. So if I go in, okay, stop that. Like if I can go in here and I could just edit this parking and tolls, you'll see here that, yeah, it's a sub account of vehicles, right? So you can really kind of well, of course you can tailor it. I mean, you can customize your chart of accounts to whatever makes sense to you. And then I have fuel here. I don't know why I have fuel because I don't purchase fuel through my credit card at all. What I do is whenever I go anywhere and it's a business expense, I just mark it and I record it here in QuickBooks. So, but I just put it there just in case, because you never know. Maybe one day I'm just driving, or if I know I'm going on a business trip where it's really, really far, and then I'll just put all the gas that I buy on the credit card, I guess. I don't know. But I feel like it just makes it easier for me, for that when I claim like whatever percentage I can of my car because of business driving, I think it's just easier to keep all the expenses personal. And then the company will just reimburse me, I think, in terms of how much I pay. Like, I don't know if it's like, 40 cents per kilometer or 60 cents or whatever. And I don't know if that's a loss or that's something that builds up into equity for me personally. Again, I don't really understand how all that works, but that's why I have to pay for an accountant. So she can help me figure all that stuff out. Okay. So we got utilities. So we have internet and cell phones. I have that. So there's uncategorized expense. That's there. That's a default account. So I guess if you put something in an expense and it doesn't know where to go, it'll just put things in uncategorized expenses. Never use it. Should never have that in your official report or if you're doing it with taxes, because what the hell is an uncategorized expense? Like, it doesn't mean anything, right? So software subscriptions. This is like the bulk of a lot of the expenses that I have. And you can see here, oh my goodness, how many do I have? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19 different softwares and subscription services that I have. They're not, I wouldn't say they're all subscriptions. Some of them might just be one-offs. Or are they one-offs? No, they're all subscriptions. Okay. So I got Zoom, which I use for, business calling. Zapier, which is something that enhances the functionality of no-code applications and websites. Webflow, I got to pay for Webflow Workspace. So it's like a business workspace where I hold all the websites that I build. And then and each website itself has to have a plan. So that's a Webflow site plan. So Vimeo is a place where I post videos. I also have YouTube and things like that, but Vimeo is something where you can have a lot more flexibility for who can see it and where you could place it, all that kind of stuff. It's and it's not free, which gives you more flexibility, which I do like and I use. Simplecast is a place where I host podcasts. QuickBooks, of course, is this. Microsoft 365. I very rarely use this, but every once in a while I'll need something to put on a computer just for like a week or whatever if I'm just doing some kind of work that doesn't have Microsoft Office. So I'll just put it in there and it ends up being like a couple bucks. No big deal. Generally, like I have Office on this computer, and I just hired my first subcontractor to do work, and I bought a laptop for them, and I had to buy Microsoft Office as well for that too. And so I just kind of buy that software straight up one-time shot, because I really hate this whole subscription model, because you don't own the software. Like as soon as you don't pay for it, you don't have it anymore. So some stuff is good, like Webflow or whatever, because you just pay, you have a website, and that's fine. Zoom, that's fine as well too. I don't want to own Zoom. But stuff like Office and like software that I've been using, like word processing used since like the beginning of time, whenever there's computers, I like to just buy it and then have it. So MemberStack, that's another, it adds more functionality to Webflow. It adds the ability to have users and also like memberships as well to Webflow websites and other websites as well too. MailChimp, that's for newsletters. LastPass is a place where it holds all my passwords and generates password secure as something can be when it's online. Hey is what I use for email. I don't use Google for that or anything else. I use Hey, which is really cool. I really like what they do. Fathom Analytics, another Google alternative to Google Analytics, and that's for tracking how many people visit a website, and it's actually private, so I don't gather any information about individual people or whatever. I mean, not that I do that personally, but Google does that, right? How Google tracks you, and I don't like doing that, and I don't like Google at all, as you might catch. But anyways, what else do I have? Domain registrations. So this isn't so much it's under like subscriptions, but it's more, I guess it could be that, like when you buy a web domain, mydomain.com, you got to pay like $10 or $15 a year or whatever it is. So I just put that in there because it is kind of like a subscription service, because if you don't pay it, then you lose that domain. So Asana, that's my task management software, which I use. Again, that would be something too. So you pay for it, you just have it. That would be nice, but it's a software as a service. I mean, I totally understand it because it's so good for companies. Artlist, that has stock like video and stock audio and sound effects. I only use it for music and sound effects to put on YouTube videos and all that stuff. So it's all royalty free, or not royalty free. You don't get like copyright striked or what have you. Amazon Prime, it's a monthly fee for that. It's just so I can have stuff delivered quickly if I need to. Don't like Amazon, but what can you do? They're really good at what they do. Like them a lot better than I like Google, but the way that they treat their workers seems to be, I wish it could be better. Adobe Stock is for stock photos, and Adobe Creative Suite is Photoshop, Illustrator, basically everything, Lightroom, After Effects, Premiere Pro. I mean, I don't use all of them, but I use enough of them to make sense for me to pay the whatever, $45 a month or whatever it is. Office and studio expense. So I have some sub accounts there, which is, and I should say too, when you have this account here, I don't actually use, like I don't put anything in the main account. I only put things into the sub accounts. So I won't put an expense into this category. I'll put it into one of these three, or into this account. So I have office furniture and set decor, office electronics and appliances. I say this too because I bought a little vacuum, which I can use to vacuum the stuff in my keyboard and in my computer, whatever, to make sure that I keep all the dust out, try to maintain my equipment. So I put that in electronics and appliances. So I don't know. Does it make sense? Maybe it's not needed, but I wanted to have a little way to separate that, because it's not like buying like your general office supplies. That's your pens, paper, ink, toner, or whatever it is, right? All those just kind of general things you need for the office, like journals, things like this, where I use to take my notes and all that stuff. So that all goes in there. Fees, insurance, of course, that's pretty self-explanatory. Fees, Stripe fees, QuickBook fees, electronic handling fees. I just put it in this because every time you buy an electronic, there's like this handling fee. And I don't think I've put it in for all of them, but I put it here because I think it's like, I don't know if I should separate this or I should just put it all in the expense of what it is I buy. Like if I bought a camera, right? It was like $3,200 and there was like a 50-cent electronic handling fee, which is like ridiculous. But I separated that out, I guess, because it's not part of the camera. Is that too much? Probably, but I don't know. I just decided to separate it out anyways. I'll ask, maybe that's something that my accountant could maybe shed a little bit of light on. Then I have credit card fees. So I have what card do I have? I have an American Express, like it's a platinum card, and there's a yearly fee associated with it. So I just put that in there. So that's not for any interest that is accrued on the credit card. I don't know. I don't have an account for that because if I ever get interest on a credit card, then that's not right. That's not how I roll. But if that ever did happen, it would be a total accident, and if I just forgot to pay or something like that. So, but I don't plan on ever having to use credit card as just like extra cash flow. So, or cash if I don't have any actual money. So then I know the business would be in serious trouble. But I don't know where that would go. That would probably go under like a liability. I don't know where that would go. Like credit card fees. Maybe it would just go under fees, like credit card interest. Maybe that's where it would go. There'd be an account for interest. Probably. I'd put it in there for now and then ask my accountant if that was okay. Anyways, moving forward, employee meals and entertainment. So this is what I have if I ever get together with anyone that I work with. To just discuss things for business, like planning and all that kind of stuff. So, if we go for dinner or whatever, then that's where that would go. Employee health and fitness. So anything that I buy employees, which is myself, for maintaining health and fitness, basically, that goes there. So next is dining and entertaining clients. So if I'm meeting up with clients just to talk business or whatever it is, I'll pay for the meal or whatever it is, and then it goes into there. Computers and laptops, computer hardware and accessories. So as I was saying before, I kind of separate out those because I buy a lot of these things, and I think it's good to differentiate between the two. Cell phones and communication hardware. So anything I buy, if I have to buy cell phones or what have you, or communications hardware. I don't know if there's anything else that could be like communications hardware, but I just put that there. In the name, just because if there was anything else other than a cell phone, then like a modem or something, maybe that would make sense. Or like a modem, like a Garmin or like a GPS satellite tracker or something like that. Brand and marketing. So this is going to expand probably into more subcategories, but for now I have print materials and gifts to customers. That's what I've been doing so far for marketing, and again, anything else will just get kind of put under there. AV gear and accessories, AV equipment rental, accounting, cost of goods sold. I don't know what this is. This is something that's automatic within QuickBooks, and I can't get rid of it. But I don't use it. So income, as I said before, there's just the standard ones that match up with the services that I offer, and there's other things here like services, billable expense income. This is stuff like this uncategorized and unapplied. This is stuff that's just default within QuickBooks. Can't get rid of them. And then affiliate income as well too. So all this, and there's these equity accounts. So these are the three that I've created. No, this one. These are the three that I created. And this retained earnings and opening balance equity. Those are just default QuickBooks accounts. And then we have GST payable, GST suspense. I think this GST is payable. Yeah, that's the one that I use because that's, I guess, right there. And then you have other accounts here. So I have furniture, and these are the asset accounts. And this is one thing I have to ask my accountant, because I don't know if these are filed in a proper space, because there's no, whenever you're making an account. Let me just see. Okay, let me talk about this a little bit. So these are things, this here, this computers and peripherals and AV equipment. These are all things that I brought into the company at the start of the company, right? So these are assets that I brought in, and they have a specific price of the asset. So like studio lighting, it was $1,000 worth of lighting that was brought into the company. Not $200 worth of speakers, $600 worth of microphones, camera lenses, this much, right? So these are all assets that the company has. And for the account type, you would think that there'd be something that's just called like asset, but there isn't, or like a fixed asset. And I think QuickBooks used to have it, but it doesn't anymore, which is kind of really annoying to me. So I put it under property, plant, and equipment, which seems kind of weird because it's machinery and equipment. But there's nothing much you can do about this. These are kind of like, you can only choose from a certain list and like, that's it. But I think what's really important is this, but I don't know if this makes sense or not. So, but I'll just show you, actually, let's just go down. Is there anything else? And then there's just different accounts. These accounts are like my actual bank accounts. So I have 5 different bank accounts that I have. And actually, I'll go over in a minute how I actually do my banking. So before, let's see, what do I want to show? Oh yeah, so let's say we're going to make a new chart of accounts, right? So there's different account types. So there's, see what I was looking for. So there's a bank, like expenses, that's pretty standard, and your income or your equity, or credit card, or like a long-term asset. So what I was looking for was an account type that is just an asset or a fixed asset. It's just something that the company has. But there's nothing like that you can pick. So it could be a long-term asset, which doesn't really make much sense to me. And it gives you a little bit of a description here of what the detail type is. So when you select the account type, then you have to select a detail type. And there's all these different things. None of this stuff makes any sense to me in terms of bringing over, microphones, right? It's not a license, it's not a lease buyout, it's not investments, it's not goodwill, it's not deferred tax, accumulated amortization of other assets. I don't know what the hell that means. Like maybe like other long-term assets expected to provide value. And that's the thing too, is I don't know about the cost of certain things. Like what's the cost of bringing in speakers as a long-term asset? How do I do, like, do I have to do depreciation for all these assets when I do taxes? I don't know. So what I did do is, because there's this property, plant, and equipment, and then you have things that make a little bit more sense because you have machinery and equipment. And I think there was something for accumulated depreciation. Was there anything for computers here? Other fixed assets that are not covered by other asset types. Yeah, so I think, use machinery and equipment to track computer hardware as well as any other non-furniture fixtures or devices owned. So if things make sense for computer, then I think anything AV, electrical technology, whatever thing that I brought in would make sense to go under here. So that's why I put it under machinery and equipment and property, plant, and equipment. Seems kind of weird, but whatever. And then you just give it a name. So yeah, so that's what I did for those. Does it make sense? I don't know. But the good thing about QuickBooks is that even though it's set up now, if I were to change the name or change the type and the detail type, like if I was to just edit this, whatever I brought in here, it's just gonna, like, you don't have to re-input anything, right? It's just gonna change the name and everything's gonna be done kind of behind the scenes. So that's the good part of that. So that's my chart of accounts. So I think it's pretty simple for me, but I think what's gonna be good is when you look at the reports. But before I get onto the reports, I'll do one quick thing. We'll go on to banking. And what banking does is you're able to link all the different accounts that you have within QuickBooks. So it can pull in the data. So like, for example, if you go to link account, it'll ask you like, hey, where's your bank account? And there's all kinds of different things. So you can even link in your PayPal, Tangerine Bank, Canadian Tire, financials. Well, I guess maybe it's not. Oh, so it supports over 20,000. Oh, that's crazy. So I'm like, oh, maybe it's just this list. So maybe it's not that much. But if you type things in, so like you could probably get into your Stripe account, all kinds of stuff. I don't even know what else you'd be able to put in. But anyways, I had problems. I tried to connect my PayPal account which I definitely do not want to have anymore because PayPal is crazy. Don't recommend keeping your money in PayPal unless you want to have PayPal basically go in there and steal it. But it didn't work very well, so it was really annoying. But anyways, you can connect a whole bunch of different stuff, and it's like should be like a read-only connection, so they can't actually go in there and do anything. So they're just pulling in the data through whatever API that bank or that institution has. And so what I have, as I was saying, I have 5 different bank accounts with my bank. So they're like completely different. Like if you had a checking account, it's like actual 5 different accounts. So I have an operating account, which is where everything goes into the operating account. So if anybody pays me, or if I pay anybody through my bank, which I like never do, but if I did, everything comes out of that operating account. So I have that. I have a tax account where I put all the tax that I collect, because every time I have to collect 15% tax on every service that I offer. When I do that, the money goes straight into a tax account plus a little extra. I'll talk about the split in a little bit. I have a marketing account where I put money that I reserve strictly for marketing purposes, that the branding and marketing category or chart of accounts that you saw there. So that's where that money comes from. I have an innovation account, and that is money that I set aside to fuel like the growth of the company. So if I know that I want to create a digital course or a digital product that I know is going to help me get more clients or whatever the hell it is, that money can come from the innovation account because it's innovating. It's, doing things that are going to help the company grow and innovate, right? Developing new products and services, basically. And then I have a reserve account, which is like in case any kind of shit happens, that's total money that is just there in case of anything, right? So those are the 5 different bank accounts that I have. And what I want to do as well too is I want to figure out how, like, there's money that's sitting here, it's not doing anything. So how can I set up, can I set up any kind of investing account? Right? So that the money, instead of sitting here doing nothing and just losing value because of inflation, can I put it into even just like a simple like cash ETF that's going to make like whatever the interest rate is now, 4 or 5%, whatever it is, then I can at least have that money doing something for me. And I don't think that's going to make sense if I have it sitting in this, like in Pixel as an operating company. That's where can I transfer that money to another holding company, and that company can go ahead and invest. But I know like when a company invests and has passive income, like that can be taxed at like a ridiculously high percentage. Like it's 50% or maybe even more of the gains. So like if I invest $5,000 and I make $1,000, I think 50% of that is taxed at like 50% or something crazy like that. So you lose a lot of money that way, potentially, depending on how your corporations are set up. So that's what I need to figure out. So anyways, so I have those 5 accounts, and then I also have my credit card hooked up, and that credit card shows just all the expenses. Because basically what I do is I buy everything through credit card. I don't think there's anything that I do that I buy that's outside of a credit card. I haven't done anything like that yet. So, which is nice because it just helps me track everything. So basically when you look at QuickBooks and you come in here to your banking, you see that this has these green check marks. That means that everything that's in QuickBooks is matched up completely within the actual account. So in this marketing account, there's $1,500, and in QuickBooks, it shows that there's $1,500. So everything's matching. So it's green. So everything's kind of up to date. So on this, my American Express card, so you can see here, so this is a balance. So this month or whatever it is. So this is a charge card. So I think you get, it's a little bit different than a regular credit card because everything that you charge, you have to pay it off when the bill comes, and you have to pay it off in full. Yeah, I don't think there's anything else to say about that. But anyways, so right now there's a balance of $5,641.21 on that card. So there's expenses that I've made that I put on the card, and in QuickBooks there's only $5,337 dollars and 68 cents. So there's a discrepancy, and you can see this 3 here. That's because there's 3 charges that I've had on my credit card that haven't been inputted into QuickBooks yet. And you can see it right here. There's just 3 things. So there's on the 17th, there's a charge here for Bell, and that's my internet. There's one here for Microsoft where I bought Microsoft Office. So So, and then there's Amazon where I bought something on Amazon. I don't know if it was just like some cable or something like that. I'm not sure. Or maybe that was Amazon Prime. I'm not sure. You have to go in. One thing that QuickBooks does is it tries to match everything into a category automatically. And you can set your QuickBooks up to, as soon as an expense comes in, it categorizes it for you and does everything like automatically. You can put it on autopilot. But I highly, highly recommend you don't do that, because QuickBooks is not really good at knowing what an expense is, especially if you buy lots of stuff on Amazon, for example. There could be all kinds of things. You can go buy stuff from like mouthwash to, I don't know, probably car parts, to clothing. Like you can buy all kinds of different things, computer parts, right? TVs, all that stuff. And that doesn't make sense to put everything in that one category, right? So you have to be careful with how QuickBooks does things. And one of the things that QuickBooks allows you to do is you're allowed to create rules. And you can create rules on, you can see them right here, on how to categorize various expenses. Let's just take a quick look at this. Again, this isn't really meant to be a tutorial. So I'm just kind of going how I'm using QuickBooks. So for example, here I have just these different rules. So with things that recur. So a rule name here, Asana, whenever it's charged on the card and it contains this, just put the category to Asana, and then that's it, right? So I just have these rules that are kind of set up, and it'll show whenever there's an expense that has this rule, it'll have like a little green thing here, a little kind of tag, and it'll say like a rule applied. So this green thing here is QuickBooks trying to identify like, hey, looks like it goes into utilities or internet, or maybe it was identified there before. So it's like, hey, maybe it's going to be the same one. So basically what you do is you go into it and you look at the category and you make sure everything's set the way it is. And then you can hit add. And when you hit add, it actually puts it into QuickBooks. And then it's like, yes, that's the transaction and it's been categorized and it's part of your books. Which I'm not going to do right now, because what I do for every single transaction, actually, I have someone that helps me now to do the books. And what they're going to need to do is every transaction, this is how I do things. Every transaction that I approve within QuickBooks, it has to have a receipt attached to it or some documentation. Like no questions asked. Like everything has to have a receipt. So if you go here, I can look at the categorize. So these are all the different expenses that I've had and that I've made, that have been inputted and approved, right? So here's one thing, Canada Computers, right? So this was added to an expense. It's actually a split expense because there's 2 different things. And this one's actually kind of a little bit of a weird one. But so if you can click on it, you can see that I bought a laptop. It was $861. And as I was saying before, that when you have a computer or a laptop, they're usually kind of like a capital purchase or whatever for depreciation. But if it's under a certain amount, and for my company, I think if there's anything that's like $1,500 or above, maybe $2,000, I'm not sure exactly what I'm going to set my personal limit to. We'll try to expense that. And if we can't, because if you can't expense it, then that's great, because then you could write off like 100% of that expense, right? So that'll be the limit. So something like $800, $861 here, that's an expense. That's not a problem. That should go through CRA, no problem. So we'll just put that as an expense. But if it was like a $5,000 laptop, then that's not going to be an expense. That's going to be an asset purchase. And then you have to do all the depreciation every year or whatever it is, right? So anyways, so you can see here, there's an attached photo. So every time I make a purchase, I take a photo and then I attach it to the expense. So QuickBooks is really cool in that you can actually, I'll just exit out of this. So there's an actual place here where you can go into receipts, where you can actually just upload a bunch of receipts, and it'll try to read the receipts and it'll put them in here as expense, and it'll try to match them with actual expenses that are in your list. So that's pretty cool. I don't use it very often because it's hit and miss, and you can actually use it on your phone as well too. So you can take the app on your phone, you can take a picture, and then it automatically uploads it to QuickBooks. Except for me, I have a really big problem with QuickBooks because I had an old account before, which had, like, I had an old account that I had set up. I was like, oh, I set it up completely, whatever. I messed it all up. So I started a new account. But for whatever reason, they got linked because I don't know, because Intuit, I don't know the name of the big company. I don't know. They linked the accounts. And then when I go on my cell phone and I download QuickBooks, it uses the old account. And there's no way for me to switch it to this account that I use. So like I couldn't take pictures and use it. So like that's again my big problem with QuickBooks is like I think a lot of their software has been pieced together, and I don't know, they just don't work very well together. So it's just really, really annoying. And so what I do now is I just take a picture and then I organize it on my own desktop or within Dropbox actually. And then whenever I have new ones, I just or whenever what happens is whenever someone's going over the transactions, they'll just go through the list of categorized receipts that are in there, and they just attach them and then they move them to categorized, and that's how we deal with that. So we have two records basically. We have every transaction within QuickBooks has a receipt attached to it, and then we also have a copy of the actual picture in like our Dropbox. So we have redundancy in case the CRA ever asks for anything, and then it's for whatever reason it's not here in QuickBooks. So the only things that don't have a receipt are when I transfer money from like one account to another. So that's how, and then the same thing here, whenever there's any new updates to accounts, it kind of comes in here as well too, as like a number 1, 2, or 3 or whatever for something for you to approve of or to categorize. And then when you categorize it, then that's it. Then it's done. So it's pretty easy. It's pretty slick. I really like going through the expenses. I don't know. It's kind of like therapeutic or whatever. And just categorize everything. And it's like, everything's nice and organized. So it feels good for me. So I like doing that. So there's a question as to why I have all these different accounts. I remember watching quite a few YouTube videos on people that run businesses and that are really successful in businesses, and they're talking about how to set up your accounts. And I came across a couple of videos of people saying like, hey, you should have different accounts for different things just to help you organize your money. So it's not just in this big one pot and you're kind of pulling money either which way and not really understanding where things are going. And I think and for me, it resonated quite a bit because I was like, yeah, I really want to make sure that if I want to set money aside for like buying a vehicle or whatever, then I have like a vehicle account so that I know that I can spend enough money or that I'll have enough money to buy the vehicle that I want to buy. And then another big thing too is like worrying about like if you owe taxes, like again, when you're a business, you collect taxes on behalf of the government and you have to pay that back. It's not yours at all. Like if you spend it, like that's fraud, like that's tax fraud, like that's big, big trouble, right? So I'm like, okay, I want to make sure that I can keep that separate. So that way I know, like I can't touch that money, right? It's just, that's tax money and then that's it. So I really like that. So I kind of settled on having these 5 accounts. And I think they're very similar to, or pretty much identical to what I heard on some YouTube videos and giving some advice. And I'm like, these guys have multi-million-dollar companies. So it sounds like pretty good advice and I like it. I think it's going to work for me. So that's what I did. So I went to the bank and says, hey, give me these 5 accounts, which is annoying. It's like a stack of like this much paper because they have to print out all the stuff opening each account. But actually what I will say, if you're Canadian and you're looking at setting up business accounts, so the business account that I have, I think it's with Bank of Montreal, which I'm not a fan of. I'm not a fan of any big bank really, because I mean, they're big banks. Not much can be said about that. But anyways, and they're all very similar. But what this one does is actually no fees. There's no fees with any of these banks for like digital and online banking. Let's see if I can I bring it up? BMO, digital, is it? That's login. Digital bank accounts. Let's see what comes up. So open a business account. I don't know if it's so much of a business account, but it might be. Right. So this is the plan here. So if you're looking for a business account and you do most of your what am I thinking? Most of your transactions online. This is great because again, no monthly fee, so it's $0. Now, if you have like payroll or I don't know, anything else where you need to go see tellers or whatever it is, then you're probably gonna have to start paying money. But for me, everything I do is online and it's just, I don't know, this works. But be careful. I think I transferred like more than 2 e-transfers. It says unlimited, but I think I got dinged like $1.50 for a transfer at one point. And it was actually really annoying because I remember I had all my transactions, everything was settled, but it was off by $1.50. I'm like, what the hell? So I was trying to find out where I was off, and then I ended up finding out that there was some kind of hidden fee that was put in there somewhere, but it wasn't added into QuickBooks. Like it was bugging me for like a whole week. But then I realized there was some bank fee in there. It was really annoying. Anyways, I paid no fees, so which is really good because if I was in like, say I had a big business account that I was doing lots of volume, I had to pay an $80 monthly fee. Once you get $80 times 5 different accounts, it's $400, right? That would be a crazy amount to have to pay in banking fees. So now I pay $0 in banking fees, which is, for me, the perfect amount of money to pay for something. So I like it. Really happy. Haven't had any problems with them. Haven't had to talk to anybody in person yet for anything. So that could change. But for now, I recommend them out of any of the big 5 Canadian banks because none of them that I saw offered free banking. Although there's other banks too that I won't even touch ever again because of screw me once. I'll never go back to. I don't know. I have a very long-term memory for any company that has ever wronged me or even perceived wrong right at the start. So CIBC, I won't touch them. I remember I was a student in first year, just coming out of high school, going to university, leave home for the first time, not knowing anything about anything. Went in to open up an account. They gave me like a hard time and almost like basically said no. This is really weird. I'm like, you don't want my money? You will never have my money ever again. What else? TD. Yeah, TD. That's another thing. That I wanted to get a product and they're like, nope. I'm like, excuse me? And was I'm paraphrasing here. And I was like, all right, no, you will never get my money again. That being said, I do have some stuff with TD because I kind of have to because my insurance is with them. And they also have a self-directing. They're the only place in Canada that I can find you can have a self-directing RDSP, which is a registered disability saving plan. So, which is okay. I think it charges you $10 per trade, which is kind of annoying. But nowhere else can you get something that's self-directed, which is annoying. Wealthsimple, you can't with. Can't with any of the other banks. You can't with Questrade. That's the only place that I found that you can have an RDSP that's self-directed. So, which is kind of annoying. But, so I kind of have to go with them. That's okay. Anyways, that's a little bit of an aside. So what else should we talk about? I think there was something else that I wanted to talk about. Oh, right. I think the last thing to go over, and I can't believe I've been talking for over an hour about this. I thought this was going to be like really quick, like 10 minutes, but do let me know if this is useful or if I've just been wasting my time rambling around about stuff. But I'm curious to know. Oh yeah, what I should talk about before we go, because we're going to go into just quickly look at like the profit and loss and the balance sheet just to get an idea, see if we can kind of make some sense of it. Before I want to talk about how I split out how much money I make and what I put into each different account. So it's pretty straightforward right now. So whenever I get any money, so any sale or any, invoice or any money I make, even if it was an affiliate thing, I get $50 from whatever it is, and it gets deposited into my account. It's split up as 5% automatically goes into reserve. That's non-negotiable. 5% of every sale goes into the reserve bank in case of any hard times or whatever, right? That's emergency money, basically. It's like an emergency savings. 5% goes into the innovation fund. 5% goes into marketing. And so tax, I'm still trying to figure out how much I'm going to need to put into tax. So the way that I think it's going to have to be is, well, first of all the GST goes straight in there. And then on top of that, I think what we're going to put in is going to be between 5 and 10% into the tax account. So why haven't I put in, what do I put right now? So right now, I don't really have a set amount that I put in, because for the first part of running the business, I was, in terms of how I was paying myself through paying back the dividends, or the equity, I should say, paying back the equity that I owed myself personally with what I brought into the company. So when I started, I brought in like $6,000 worth of equipment, and I brought in like $7,000 whatever worth of personal spending with my own money. So I paid myself that money back in my first fiscal quarter, and only now am I starting to, now that I'm caught up, now I'm going to have to start thinking about what I'm going to have to do with paying taxes and all that kind of stuff, and how much I need to set aside for that. So right now, like I said, it's going to be between 5 and 10%. But I'm not sure where it's going to land, because there's two things to consider. Number one, whenever you make an expense, and I buy something, like I buy a computer and I have to pay 15% tax, that 15%, that's like a tax credit. It's like you don't have to pay back. So that can lower your total taxes. So if I collect $500 in GST from a client, that does work, $500. But then I have $500 in tax that I paid when I bought a new computer. That is like a wash. That means like normally I would have to pay $500 in GST, because that's just what I collected. It's not my money. That's just what I pay them. But if I have an offset of tax credits of $500 of GST that I paid on a purchase for my company or for my business, then that goes to zero. This is my understanding of it. So then I don't have to pay any GST at all. So that money doesn't actually have to be in the tax account. So, or if I keep putting that money in the tax account, it'll end up being more. So the tax rate now, so here's the thing to look at. So here's the tax rate in Canada, the corporate tax rate. And I think I was talking a little bit about this yesterday. So let me just leave that on screen here for a second. So what I think it is, now this year I don't plan on making more than $500,000 in profit, which would be amazing. We'll get there eventually, but not this year, I don't think. So we're going to be at this tax rate. So we're living in Nova Scotia. We're at 2.5%. Now I think we also have to pay, that's the provincial tax, but I think the federal tax is 9%. So I think. So I think that means all the profits we have that's under $500,000, we have to pay 11.5% tax on everything. So if I go back to here, what I should do is every time I make, a sale, I should take 11.5% and put that into my tax account. But I'm always making purchases, right, from here. Just to run the company. So I'm spending a lot of GST, which is going to lower how much I put in GST. So I think like at maximum, I have to put in 11.5%, but I'm thinking maybe somewhere between 5 and 10% should go into this tax account. And that should kind of cover me to make sure that I have enough tax in order to, one, pay my GST, and number two, pay my income tax come the end of the year. Again, this could all change depending on how I might end up changing my whole corporate structures and all that kind of stuff. So, but one way to take a look at this. So let's go into reports. So reports are kind of cool ways that you can see a few things in terms of how much you have to pay with taxes. So we could do a GST, HST report, right? So right now I can go, not this fiscal quarter. Let's go this fiscal year. So I already paid my first fiscal quarter GST taxes. So now I just need for this fiscal year, which is going to be from November 1st to Halloween. I kind of like that, Halloween being the end of the year. Okay, let's run that report. So you can see right here, this is how much revenue I've generated, and this is the GST that I've collected on that revenue. And so that's how much GST I owe the government, right? But these are the tax credits. So this is the tax credits. Again, this is all the GST of all the things that I've purchased. So if I click on this, you can see all the different things that I've purchased, what the net amount was, and what the tax rate was. And I think yeah, this is the actual tax. And this gives kind of a running balance of all the different tax. So you can see how much tax I've paid on goods that I've purchased in order to, run my company or run my business. And then all that money here is like a tax credit. So, and it's like 1-to-1 or whatever. So that means if I were to file my taxes right now, I would owe, or not file my taxes, file my GST, I would owe $2,429. And if I go, can I open this in a new tab? So if I go back to my banking, no, this is the banking. Yeah. I could see that I have 3,300 in my tax account, which is more than enough to cover what's in here. So if I knew I wasn't going to pay any taxes, I would just need to make sure I have enough GST here or enough money in my tax account to cover what this GST is. So yeah. So that's the GST report, which is a handy report. So let's just look at just two more reports here. So here's the balance sheet. And I think as of February, so I think this is a balance sheet as up to date for today. So like kind of all time. So again, you can kind of see your assets, and these are the assets. These are my bank accounts. And again, this is this undeposited funds, which is just there. It looks stupid. I hate it, but it's just there. I don't have any accounts receivable. So non-current assets. So this is really weird. It's a non-current asset. It doesn't make any sense to me in what it's categorized, but here are all the things that I kind of brought into the company. And I think there's a few different things that I bought that were assets. I think this was just a camera, which was more expensive. And I think these are things that I'm going to have to put in like capital, like depreciation, or just, I don't know if we should call it capital depreciation or just depreciation on capital equipment. I'm not sure. But it doesn't make sense to me because it's not very expensive, but I don't know how that's going to work. But anyways, it shows the different assets that the company has, computers, laptops, and, furniture. And again, this is not the computer like the laptop that I just bought that I did expense. This is computer peripherals that I brought over when I first started the company. So I have that much in total assets, and I guess this is the total. How much all of this equipment is worth, plus how much cash I guess I have in my bank. So there's $28,000 in assets, and my liabilities, you got to pay off the credit card, and then this is what I owe in GST. This is all the GST. This is bigger because that's the 2,300 we saw before, plus about $600 or $700 that I had on the last fiscal year. So my total liabilities are 8,000, and then I guess it doesn't just total them up. Oh, total equity, yeah, it's 20,000, I guess. So that's would be this minus this. Yeah, I think that's what that is. And then, so here's this equity stuff. So this is, I think it was set up right, where initially that's how much all the equipment that I brought in, that's how much it cost. And this was like fair market value. So I was like looking at how much things are selling, what are the depreciation values of the different equipment or whatever. And that's the total. And this is how much money I spent on just like using my own personal credit card on buying things for the company when we first started out. And that totals $14,647.83. And that's how much I paid back through the profits or whatever I made in income in the company that paid back to me personally. That kind of paid my bills throughout all of last year. Retained earnings, I think that's just the amount of profit or whatever that was left at the end of the first quarter or my first fiscal year. And this is the profit I guess I have for this year, which brings in, again, total equity. But I don't know what is this total? Yeah, I guess profit for the year. What is this number? So this is a little bit, this number and this number are identical. I guess that makes sense, but how is that possible? Because is this 28,478? Yeah, so that's this plus this. And then my total assets are the same. I guess that makes sense, right? Because your assets would just be your equity plus your profit minus your liabilities. So I guess that makes sense. I guess if they weren't the same, then I'd have trouble or be in trouble. I don't know. I don't know if they should be the same or not, but I think it makes sense. So anyways, but this is a balance sheet. So I'm not sure exactly how, like on its own, this doesn't tell the story of how good a company is doing. So like, what you can do is, you can collapse things a little bit to see if it makes a little bit more sense. And these are where the different accounts, like where you have, like sub accounts where you can kind of collapse them. So you don't have to see this big, huge list of, expenses. So like here, we know this is how much cash the company has. These are the current assets, liabilities. Yeah. Which is, then the rest is in equity, because if it's not in cash, assets plus cash is this, all of the assets minus the liabilities should equal the equity, which makes sense. So it makes sense why those numbers are the same. Okay. So that's cool. So again, that doesn't say if the company's making money or not. It's just like, what are the assets and liabilities, I guess, as of today. So what we can do is we can go in and we can take a look at our profit and loss statement. Again, this is just from this fiscal year, which is, it's most of, I mean, we can go all time. There's not much of a difference. There's a few extra, I think, pieces of income. But so we have our income. So we have our expenses. So we can close all of these down again, because it's a huge, huge list. But we don't need to see all of them. There we go. So that's a lot more digestible, I think. So can I make it a little bit bigger? So here we have all the income broken down into categories. We have our expenses, and you can kind of see like where I spend the most of my money. Like this year, I had to buy I bought new components to build a new computer. So I was there. Hopefully this will be good to write off all the individual components, because it's not just one. I didn't buy like a big computer. I just bought little pieces and kind of put it together. So hopefully that'll be okay to expense. And then like office and studio. So there's stuff spent, especially with this set and the decor furniture too. I think I bought like a new desk table. It was like $500 or something like that, or $400, whatever it was. My software subscription's $3,200. So that's really expensive. So, you don't really know, until you kind of add it up. So and then what I like about this is I can break it down into which is costing me the most. So I can see there my Webflow is pretty expensive. Every site has a plan or whatever. So that's going to be pricey, and I need to recoup that from my clients, which I'm not doing right now, which is because I don't have a recurring way to get money from my clients, but we'll get there. Because I've only recuperated $400 for that. So the rest is just me paying out of pocket, which is fine. I don't mind helping out my clients that way. And yeah, I can see Artlist is pretty expensive, but I know I pay that once per year, so not so bad. Asana, that's going to end up being really expensive because it's like whatever, $30 a month. So yeah, you can kind of see what's expensive, what's not, and what adds on, and what's, keeps building and building. Like Adobe, that's going to end up being really huge, so yeah. But again, it's the cost of business. I mean, I don't mind paying it because it's just part of it, right? So you just got to build that into your profit margin. So, and I can see, so for me, since I've been running this company, I've made a profit, I guess, of $20,000 so far. Again, it's not cash flow, right? Because I don't have $20,000 cash in my bank. I only have like $16,000 in my bank, and it's even less than that because I know I have $5,000 or $5,500 in liability to pay off the credit card this month or whenever the bills due, right? So, and then that's the cash flow. But there's also like a cash flow statement, and I don't understand this statement just quite yet. Well, I mean, I know that this number is exactly equal to I think if we went to the dashboard, I think it's a summary. If I added all this up that's in the bank, or like this stuff here, I think that's going to equal this. But yeah, cash flow. Right. So this is a minus cash flow because that's a capital, like a big purchase that I bought. Yeah, these are liabilities or whatever. Adjustments to reconcile net income to net cash. So that's how much cash I have. Why is it on net income? Is adding these together? Why wouldn't it be? Why is it adding this together? Because that's not cash I have on hand. That's like debt. Yeah, I don't understand. If you're watching this into the future and you understand why these are being added, please let me know. So this was paying back myself. So net cash increase. So net cash increase looks like that's this minus this equals this. And this is just cash at the beginning of the period. Cash that was sitting in the account on November 1st. Let me just go like all dates. See. So there's no cash at the beginning. So cash at the end, which is what I have. Yeah, these are investing activities. So that's cash out. No. Maybe this is cash in because you could sell it. Yeah, I don't know. Yeah, I don't know. Something to do with this. I mean, you have cash here at the end of the period. So if this is positive and your balance sheet is positive and your profit and loss is positive, I think that's positive. Oh, excuse me. Sorry about that. So yeah, overall, I think I'm in good shape. So, but understanding those three, maybe I'll do a video in like 6 months when I have a better understanding of those three reports. And one thing I just wanted to look at real quickly, I brought this up. So Nova Scotia pays 2.5 plus 9. So we have 11.5%. And then when we go above that, then, we're pretty bad here at 14%. I'm surprised that British Columbia is low. I thought that they would be probably one of the highest. PEI, that's high. And this is also, I think this is just a provincial rate. So then there's a higher federal rate as well too. And I don't know what that is. Some provinces choose to use the federal business limit. Others establish their own limit. So I was looking because Alberta and Quebec aren't in here. So I'm looking at Alberta, and Alberta's tax rate. This is 8%. And I don't know if that's all income is just not all income, all profit is at 8%, and there's no like tiers. Like, is there after 500,000 you have to pay? You go up to the blah 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 blah. You go up to the 14 plus 9%, so like 23%, or is it just 8%? Just no matter how much money you make. So corporations doing business in Alberta are generally required to pay Alberta corporate tax. Let's bring this bigger. Recovery plan. So why am I looking at this? Because I'm free. I'm free. I'm free in the sense that I can run my business from anywhere in the world, really. And this really speaks to a little bit of what I was talking about yesterday about where to incorporate, what makes the most sense for you or what have you, or not where, sorry, what structure to incorporate. But I'm also thinking of where's the best place for me to live? What makes the most sense? And I'm not only thinking about where's the lowest taxes. If Alberta pays 8% tax on all profits, say at $1 million, then I know that if I make $1 million in Alberta versus I'm making $1 million in Nova Scotia, and I have to pay just a number here, I have to pay $100,000 less in taxes because I live in Alberta. Well, then I'm going to move to Alberta because that makes the most sense. Now, there's also other considerations. Well, you got to think about what part of the province you want to live. You just don't want to maximize for taxes because that's also not the best thing. I also want to go about like quality of life and what, where would be the best place to live, think of the family or whatever. And when I think about that, I also think about Canada in general. And is Canada the best place to live? And I don't know. I always thought Canada was the best and the best place, but I don't know anymore. I don't know if there's other places that are better to live than in Canada. And I guess what has got me thinking about this, I mean, there's a few things. But one of the big things is when you're starting a business and you're kind of looking at all the different things that you could be subject to as a business owner, you're like, wow, that might not be the best place to do business then. If it's going to be where I'm going to pay so much in taxes or whatever, then maybe it makes sense to do business somewhere else. I don't know. Anyway, it's just things that I've been thinking about. It's just, I don't know. It's like a fascinating whole new world has kind of opened up when I'm thinking about this whole business stuff, where there's so much more than just running a business. There's so many different things to consider, especially about where you live and where and how are you going to pay taxes. Because again, I don't have any problems paying taxes per se on a, on principle. In principle, like you pay taxes to the government and the government provides you a certain amount of services. I like having roads. I like having paved roads and snow plows and all that kind of stuff. So I do like that. What I don't like is when I have to go to the hospital and I need to get an MRI for something and I got to wait a year and a half. I don't like that. I don't think that's very good value for the money in terms of how much we pay for healthcare, right? So are there places where that could be done better? I don't know. You got to kind of have to figure that out. So anyways, that's a little bit of an aside, a little bit of things that I'm thinking or things that are in the back of my mind in terms of where's the best place in order to have a corporation. And I guess also in terms of where to live and what lines up with, I don't know, the things that you're trying to do as a company and what I'm trying to do. Yeah, I don't know. That's a little bit of inside, neither here nor there, but QuickBooks, that's how I use QuickBooks and that's how I kind of set it up. And so far it's working for me. And I do like it. Would I recommend it? I think I would recommend it. I mean, there's free services out there. Like there's Wave apps and there's like FreshBooks for people that are doing like a lot of freelance type work. And I think it could serve a specific niche and a specific purpose. And again, if you're very, very simple and you're not very complicated at all, I think those would work. But for me, I know my accountant uses QuickBooks. She's really good at QuickBooks, phenomenal. And if my stuff is going to get more complicated by having more companies or what have you, then having something in a software that she's going to be able to understand and her team's going to be able to look at and help me out with, it just makes the most sense. Even though it is pricey, starting at $22 a month, it might end up being more depending if I have to have additional features or what have you. So it is expensive, but for me, it's worth the price. And again, too, it's like $22 a month, right? You know, if you're a company making some good money, then it's not too bad. And I guess you can talk about how you do your pricing and how to make sure that you include all the cost of what it costs to produce a good service to your client, and you make sure you kind of pass that on to them so that you're recouping your money plus profit as well too, because you have to make sure you put that into the price. And that's a whole another thing about talking about pricing and how to price things. But if QuickBooks is something that you need and you want to make sure that you have enough money for it, make sure that you charge a little bit of extra to your client so that you recuperate that cost. So that way it's just part of doing business, right? So, and then you can afford it because you need the right tools in order to do good business. And for me, the right tools are things that don't get in my way and just allow me to do what I need to do with them and then move on to something that is, of I wouldn't say not more important, but of something that's, of importance, right? To move on to the things that are going to help me make more money, which is what I like to think about. So with that, I will end it. So that is today's show, today's stream. So thank you so much for joining. I got lots of work to do for clients. I wish I could show you the work that I do for clients. I could just, put on some music and I could just work on the stuff I do for my clients. So maybe if I ever get a client that is okay with me doing their work in real time, like live, then that'll be fantastic. Then we could just work together for like hours at a time which would be awesome. But maybe next time what we'll do is there's a few other personal sites that I have to do. So that could be something else that I can create once, obviously Pixel is out the door. There's going to be other things that I need to go in the door. I'm not sure. All right. So thank you so much for watching. I appreciate it. Please let me know what you thought of this video down below, in the comments down below. I'd really appreciate your feedback. If this was, helpful in any way, or just a complete waste of time with me rambling for an hour and a half, that could be it too. So if that's the case, then why are you listening all the way to the end? Then that's another question that you might have to answer. All right, guys, have a good one. Take it easy. Wishing you all the success and all the luck in your business. Keep working hard, and I'm sure you'll get there. And until then, I will see you tomorrow.